Folks, you better buckle up and strap in. Nvidia has a big catalyst coming right around the corner, and the clock is ticking next Monday on March 18th, 2024 at 8:30 a.m. Pacific time. An event will be happening that will quiet the masses as they watch and listen. Nvidia has some massive announcements to make, and this is going to be a big deal, and you need to know about it and prepare now because markets, of course, tend to anticipate ahead of schedule. Last time Nvidia had this event, they revealed massive new products and offerings, and that predated the massive price appreciation we've seen in their stock price. And in today's video, we're going to go into everything that you need to know and why I expect Nvidia's biggest clients are going to start buying a lot more chips soon. And then lastly, I want to give you an update on Mara Lovely Mara stock and why I believe she is underperforming right now and whether my thesis on her has changed. In fact, there's one specific reason why her price is being held down in my view. And the only thing I ask in return for all of the work that goes into making a video like this is that you hit that ravishing like button, turn on the notification bell, and don't forget to subscribe. And as always, you should never buy or sell a stock just because we talk about it in a video. You need to be going off and doing your own due diligence and making your own decisions. Okay, let's go ahead and get to work. Timestamps down below. So context, Nvidia has been running because it is the leader in GPU technology, and GPUs are central to the workability of AI. That's because they can perform multiple operations simultaneously, a crucial ability for processing the vast amounts of data used in training AI modules. And Nvidia is the key top dog in the GPU space. Now, Nvidia has a big catalyst coming next week, and maybe you already know about it or you don't, but it's a much bigger deal than meets the eyes. And that's Nvidia's GTC 2024. This Nvidia conference is shaping up to be a landmark event with a strong focus on, of course, artificial intelligence and high-performance computing. But this conference, folks, is expected to showcase groundbreaking advancements that could significantly influence the overall tech landscape. And again, I mean, you could say that this is very hypey and we shouldn't be talking such positivity about Nvidia, but look at what happened at the previous conferences. Almost everything they said has come true and Nvidia has delivered on, which is why it's so important to follow this one closely. This conference promises an extensive lineup of sessions, keynotes, and workshops focusing on AI advancements and their applications across various industries. And all of these are going to be clipped for months and months by financial media as they report on NVDA. And it's all happening next week. This year's agenda includes discussions on generative AI and automotive workflows, intellectual property challenges in the era of generative AI, and the transformative role of AI in healthcare and medicine, among other topics. The event will also spotlight contributions from AI leaders across healthcare, transportation, financial services, telecom, and agriculture sectors. But I want to talk about expectations here. What is Nvidia expected to reveal and showcase next week, and why is this even going to be a big deal for the stock? Well, one of the most anticipated revelations is the unveiling of the next generation Blackwell GPU architecture. Now, for those of you like me who aren't exactly chip savvy, let me break this down. Well, this next gen Blackwell GPU architecture is expected to be a significant leap forward in the realm of high performance computing. When you increase the processing power, you get better AI applications. ChatGPT can do more. Your data analytics software can do more. Your image renderer can do more. Your ad analysis platform can do more. Anything that uses AI can do more, can go farther. You can achieve more with AI than you ever thought possible. And that's why these chips and these new GPUs are so important and the performance boost that they give. Now, although specific details about this Blackwell architecture are sparse, while its importance can be inferred based on NVIDIA's historical progression with GPU architectures and their impact on various sectors. NVIDIA's GPU architectures have traditionally driven advancements in several areas, and I expect all of these will have advancements this time around as well. Number one, of course, increased computational power. With each new generation, NVIDIA GPUs have offered significant improvements in computational power, enabling more complex calculations at higher speeds. This is crucial for almost every field, but specifically, I mean, you think about scientific research. Simulations and data analyses that were previously infeasible start becoming more and more possible as time goes on because of this computational power increase. And when I'm saying scientific research, I mean research into how you can make better and better AIs, and AIs generating even better AIs, and the loop and circle of insane exponential growth. Number two, advancements in AI and machine learning. You see, NVIDIA's GPUs are at the heart of AI and machine learning developments, from training large neural networks to deploying AI applications at scale, and the Blackwell architecture update is likely to further enhance these capabilities, potentially enabling more sophisticated AI models and applications for markets to get excited about. Number three, enhanced graphics and gaming. Although the primary focus of this event is going to be on high-performance computing and AI, advancements in GPU technology are also going to benefit the traditional segment of Nvidia, which is games. They're going to benefit graphics rendering and offer more realistic environments and smoother gameplay, which is also going to be very helpful for companies like Meta, who are going very, very deep into that space as well. Certainly metaverse, where you need to have very, very high performing graphics. The next is energy efficiency. Newer architecture often focuses on improving energy efficiency, which is critical for reducing operational cost and environmental impact, especially in data centers where these GPUs are usually deployed at scale. They're also expected to announce support for emerging technologies, greater support as we move towards more immersive technologies like virtual reality, VR, and augmented reality, AR. The demands on graphical processing power are increasing rapidly. Future GPU architectures like Blackwell are essential for supporting the development and widespread adoption of these technologies. So anything they can announce that excites investors in that space should cause the company to get a lot more attention. Okay, so we have this big conference coming and everyone's going to be talking about Nvidia and their products and their services and their improvements, so on and so forth next week. But what you have to be thinking about are the Benjamins, the Benjis. You look at the price of NVDA and it's nearly 10x from October 2022 levels. And many people in markets are assuming because it's up that it must be a bubble. And we've talked about how while it will have a big dip cycle eventually, well, its ultimate value as a company is based on its underlying business and not just the stock price, right? And so you need to be thinking about who are the biggest companies that are buying NVIDIA chips and are they going to buy more or less? I think it really comes down to just that simple question. Are companies going to invest more or less in AI infrastructure as this new economic revolution continues to grow from its infancy? Do you think that there's going to be more or less purchases? For me, it seems pretty damn obvious that there's going to be a heck of a lot more, an exponential curve of more and more demand for NVIDIA chips. So I want to go through some of NVIDIA's main clients and how they are continuously scaling up and purchasing more and more chips for this AI revolution. Firstly, you have Google/Alphabet. They're pouring tons and tons of money into AI and utilizing tons and tons of NVIDIA chips in their data centers. Google invests heavily in AI to maintain and enhance its competitive edge in search algorithms, data analytics, and personalized services. AI technologies enable Google to analyze vast amounts of data to improve the relevance of search results, target advertisements more effectively, and offer predictive text and voice recognition features across its products. This investment is not just about improving current services, but also about pioneering new technologies, such as quantum computing and AI-driven healthcare solutions, which can completely redefine industries. Amazon is also a mega buyer of NVIDIA chips. Amazon uses AI extensively across its various business segments, most notably in its e-commerce platform, cloud computing services, and consumer products like Alexa. The company's investment in AI is aimed at enhancing user experience, improving operational efficiency, and creating new products and services. For example, AI algorithms drive personalized product recommendations on Amazon's e-commerce platform, significantly influencing purchasing decisions and increasing sales. In addition to e-commerce, Amazon Web Services, AWS, offer a wide array of AI and machine learning services for businesses, helping them to incorporate AI capabilities into their operations without the need for deep expertise in the field. This is a big deal. This democratization of AI technology supports innovation across industries and contributes to Amazon's revenue growth in the cloud sector, which is exploding. Amazon also invests in AI research and development for autonomous delivery systems, which also need a lot of chips, including drones and self-driving vehicles that are supposed to help its logistics and reduce delivery times. The company's commitment to AI reflects a strategic vision to maintain its leadership in e-commerce, cloud computing, and beyond by continuously integrating cutting-edge technologies to meet evolving customer needs and business challenges. Meta is also spending billions upon billions of dollars on NVIDIA's chips and expected to spend much more. Meta has been leveraging artificial intelligence to enhance its social media platforms and develop new technologies aligned with its vision for the future of connectivity through virtual and augmented reality. AI and really good chips are crucial for managing and interpreting the vast amounts of data generated by billions of users, enabling personalized content delivery, targeted advertising, and moderation of harmful content. Now, Meta's investment in AI also is supporting its ambitious projects in the realm of the metaverse, which is going to be a collective virtual shared space created by the convergence of virtually enhanced physical and digital reality. AI technologies are, of course, essential, absolutely essential for creating realistic and interactive environments, understanding and translating languages in real time, and enabling users to interact with digital content in very intuitive ways. So Meta needs a ton of NVIDIA chips. You also have Tesla. Elon Musk said on Twitter that Tesla will spend more than $500 million on NVIDIA hardware this year, referring to 2024. Tesla's investment in chips for AI is for its self-driving technology with a vision to achieve full self-driving capabilities, of course, a very well-known vision. The company collects vast amounts of data from its fleet to train AI algorithms, making incremental improvements towards safer and more reliable autonomous driving. Tesla's CEO, Mr. Elon Musk, has also hinted at broader ambitions for AI, including the potential development of AI beyond automotive applications. Now, even companies you wouldn't think of are investing tons of money into AI. Netflix, for example, Netflix is a prime example of a company that leverages artificial intelligence, and very, very few people even notice, but they leverage artificial intelligence across multiple facets of their business to enhance user experience, improve operational efficiency, and maintain their position as a leader in the streaming industry. Here's a few examples of how they do that. Number one, personalized recommendations. One of the most visible applications of AI at Netflix is its recommendation system. Netflix uses AI algorithms to analyze billions of records of viewing data to predict what individual viewers might want to watch next. These recommendations are based on a variety of factors, including the user's viewing history, the time of day they watch, and the device they use. By personalizing content for each user, Netflix aims to increase viewer satisfaction and engagement, reducing churn and encouraging longer viewing sessions, and it's worked very, very well. Number two, content optimization. Netflix also uses AI to optimize the content itself, ensuring the best possible viewing experience. This includes adjusting the streaming quality in real time based on the viewer's internet speed to prevent buffering while minimizing data usage. Additionally, AI algorithms help Netflix determine the most compelling thumbnail images for its content. I wish I had one of those. I would have a little bit more variety in my thumbnail content if I did have that. But anyways, by analyzing which images viewers are most likely to click on, Netflix can increase the likelihood of viewers choosing to watch a show or movie. Number three, production and content acquisition. AI even aids Netflix in making informed decisions regarding content production and acquisition by analyzing vast amounts of data on viewer preferences, including genres, actors, and plot themes that are currently popular. Netflix can identify gaps in its content library and invest more into shows and movies that are more likely to resonate with its audience. This data-driven approach helps Netflix to prioritize its investments in original content as well as to decide which third-party content to acquire. Number four, enhancing user interface and experience. Netflix employs AI to continuously refine and improve the user interface and overall user experience. This includes everything from search functionality, where AI helps to understand and predict what a user is looking for, even with typos or vague queries. And these are just a few ways that Netflix uses AI in its business model. And in order to do all of these things, all of these companies need very, very, very good processing chips, GPUs. You need these in your data centers, you need these in your servers, you need these all around, and you need the best ones if you want to stay competitive. And guess who is the leader in the GPU space? Well, Nvidia. And I made the argument for a few of their competitors why I think they're also going to make tons and tons of money over the coming years, specifically AMD. But I think overall, big picture, do you think that the companies that I talked about here today and the ones that are also using Nvidia, which there are thousands, well, do you think they're going to be spending more or less on GPUs, Nvidia chips in the future? I'd argue way, way more. They're going to need to if they want to stay competitive. They're going to need to if they want to keep up with this AI revolution, which expands processing capabilities every 6 months by a massive, massive leap and bound. So again, let us know your thoughts down below. Are these companies going to spend more or less on Nvidia chips in the future? Okay, final segment, moving on to Mara. So Mara is my favorite Bitcoin crypto miner, and sure, we've been covering her in this current cycle a lot since basically the beginning of it, but she started underperforming during Bitcoin breakouts over the last week. Now, why might that be? Well, I believe it has to do with two filings. On March 4th, 2024, Mara filed an S8 form, which is an initial registration statement for securities to be offered to employees pursuant to employee benefit plans. And on February 29th, they filed a S3 ASR form, which is an automatic shelf registration statement. The S8 from March 4th, it explains that they're registering an additional 15 million shares. So one key reason that markets may be reluctant with Mara right now is simply that filing. They are worried about being dumped on. Markets are scared about being dumped on. Short sellers are exploiting that, of course, as well. They want stock to go down. Now look, folks, I am no fan of dilution, but that's just how it works when you're dealing with small cap stocks. I've been critical of Mara's dilution in the past, but quite frankly, I mean, previous dilutions have been reinvested into the business model and made even more money. And quite frankly, I mean, the history on dilution derailing Mara is very, very, very weak. I mean, Mara dumped just under 20 million shares on December 31st, 2023, and it didn't derail the uptrend at all. The way that I see it is that if Mara is going to go ahead and offer more shares, which they haven't confirmed yet, they're just filing for the ability to do so. Well, if they're going to offer more shares and reinvest the money back into their business, well, that could make a much higher return overall on Mara stock and help them increase their infrastructure, which is expensive, increase their overall production, which helps them increase their overall production rate of Bitcoin. Well, that could end up shooting a lot more profits for Mara. But at the end of the day, folks, you know what? You got to understand that Mara, she's a dirty little tease. She goes up a lot, but quite frankly, there's going to be teasing cycles where she goes down, she underperforms, so on and so forth. If you're somebody that does not believe in the Bitcoin mining strategy, you should avoid her like the plague. But for me, I'm looking at her and she's been very, very well managed for years. She managed herself well during the crypto winter and she's booming now in the crypto bull market. So in my view, the underlying thesis doesn't change because she's offering some shares. But from a practical standpoint, when it comes to offers and anticipatory offering sell-offs, well, I look at those the same way that I look at any sell-off. It's something that can be mitigated with risk management, clean and clear stop losses. Let Mara sell off. This isn't Mara's first dump rodeo. We have some time until halving next month. If she dips a lot now, that means more room for her to run back upward. At least that's my viewpoint. Anyways, that caps off the video. Make sure to hit that ravishing like button and subscribe, and we will see you in the next one.